Hey, it's your financial maven, Samantha Besnoff, CPA, and after almost 25 years in the accounting world, I've decided to share my insights and passion about money. Knowing your money and hopefully feeling less stress about your money is what I call being financially empowered. Welcome to the Your Financial Maven podcast. Hey, it's your financial maven, and welcome to another Do You Know Your Money Minisode. Today's topic is life insurance. It's something we absolutely need to talk about and should absolutely be a part of your budgeting and planning when it comes to finances. You know, I hear a lot like, oh, life insurance is too much. I can't get any life insurance. And I always say, yes, you can afford life insurance and that everybody should have some type of life insurance. You know, I'm a certified public accountant, but I am also an independent life insurance agent. And I'm talking to you about this today because I have the expertise, not because I'm trying to sell you life insurance. I'm trying to get you to understand why it's important to have life insurance. One of the things that I come across a lot is I have people say, well, you know, I work for so-and-so and I get life insurance through my job, which is great. Absolutely take advantage of that through wherever you're working. But I will tell you, if you decide to leave, if you get fired, that life insurance doesn't go with you. That is a benefit the company is providing to you. And so I say it's always good for you to have extra life insurance that you purchased, that you go and get the quotes for, you have a relationship with the life insurance agent, and that life insurance policy goes with you. You could move to another job, move out of state. Your life insurance can go with you. Now, of course, you have to update and make changes to your life insurance if you move out of state or you get married, you get divorced, etc. But it's very important to have it. You know, life insurance can be used if you pass to help your family with the mortgage, student loan debt, everyday living, funeral costs. So having life insurance is important. And I say, even kids can get life insurance, and it might not be a bad idea to consider getting life insurance for your kids. So what I want to do first is I want to go through the terminology, and then I'm going to go into the different types of life insurance. I'm going to focus a little bit more on what's called term insurance, and then also talk about why it's important to review. So just sit back and enjoy. I know this is a topic that you may not want to have to really deal with, but it's important. Life insurance is very important. All right, so what is life insurance? So life insurance really offers you financial protection to a chosen beneficiary by providing a death benefit. So when the insured passes away, they've got some kind of income or insurance to cover things, you know, replacing lost income, passing down an inheritance, supplementary retirement income, covering student loans, paying off a mortgage, etc. So really, life insurance is financial protection. There's also something called living benefits that kind of can go along with life insurance, and that is related to qualifying illnesses on some policies. So if the insured does not pass away, but they have an illness that falls under these categories, you can utilize your life insurance if you have these living benefits. There are different types of life insurance, but before I go into that, I think it's important to go through some definitions so that you understand a bit about what goes into a life insurance contract, who's who on the contract. That way, when you sit down with somebody like me, who is, as I mentioned, an independent life insurance agent, you'll have a better understanding, as you should be. You should definitely have a better understanding. So the first term I'm going to go over is policy owner. And basically, this is the person that owns the insurance policy. They can name the beneficiaries. They can make changes to the life insurance contract. The policy owner can also be the person that is insured. That's who the policy is written for. So the policy owner can be the insured, or the policy owner can be somebody different that they then name an insured person. And as I said, the insured person is the one whom the life insurance policy is written for. So beneficiaries, what are they? These are the people, it could be one beneficiary, two beneficiaries, several beneficiaries, that would receive the death benefit of the life insurance policy. So what is the death benefit? The death benefit is the amount of money you would get paid as a beneficiary following the death of the insured. Now, as I mentioned with living benefits, you can draw against that death benefit amount for qualified illnesses. So living benefits do allow the policy owner to access the portion of that while the insured is still living. So if you're the policy owner and the insured, you can access that. If you are the policy owner, but you are not the insured, only the policy owner can access some of the death benefits to cover those qualified living benefits. Something else you need to know is cash value. There are some types of insurance policies that give you an ability to earn interest. You could access that cash value through withdrawals, things for future financial needs, and it's a portion of that life insurance policy. Not all of them have it, but some do have that. So something happens, the insured passes away, or there's the illness. What is the process called to get that death benefit? Well, that's called the claim. So the claim really is that process following when the insured has passed away, when the beneficiaries can file for that benefit to get that money out of that policy. There are insurance companies that will have a claim kit or some other way for you to go ahead and file forms and verify who you are and access that death benefit. Of course, you'll have to prove date of death and other things for that claim. So when does a life insurance policy go into force? First of all, that's called the effective date. When do they become effective? So it's when you are delivered the policy, you've paid your premium, and then it goes into force. Of course, now it has to be active after that effective date, meaning that once it's active, if the insured passes away after that effective date, you could receive the eligible death benefits as the beneficiary. If the policy has not been placed yet, has not been handed over, there's no premium, you're in the process of getting that life insurance, and the insured passes away, then most likely you will not get that insurance. So it has to be when that policy is placed into force. So with regards to that, it's kind of you go through the process, you fill out the form, you're talking to an independent life insurance agent, and there's processes. You have to fill out information, most likely about who you are, your age, your health. And all of this process of gathering all the data and then reviewing the data is what we call underwriting. And that's really the process to determine, after looking at all of this data, any risk that may be associated with insuring the person for life insurance. And as I mentioned, medical history, health conditions, family history, sometimes you have to do blood work and sometimes you have to do exams. The underwriters are the ones that can determine, is it worth the risk to take on this person who needs to be insured? Now that I've kind of given you a little bit of terminology that kind of relates to who's involved in a life insurance policy and the little different things of like when it goes into force and how it becomes active and stuff like that, I want to go through three main types of life insurance. I think that's also important. The three are term, permanent, and indexed universal life insurance. So term life gives you life insurance coverage for a specified period of time. Typically 10, 15, 20, or 30 years. Term insurance is the most affordable type of insurance protection, and it could be a good fit for young families, somebody with a financial need, things like that. So compare that to a permanent life insurance. And as you could say, permanent really means it's covered for that person, the insured's entire life. There's opportunity to build cash value. We mentioned cash value earlier, to be able to access that through, loans, withdrawals. And permanent insurance could be a little bit more than term. It all depends, again, on health and age and things like that. So there is a difference. And you can take a term policy after it goes through, let's say it's 20 years and then you're of a certain age, you could convert that to a permanent life insurance. So you definitely have options there. And then the third one, indexed universal life. It is a type of life insurance which offers the death benefit protection and an opportunity to build long-term cash. This cash value will earn interest, which is linked to movement in the stock market over a specific period of time. The growth is based on the stock market index, but the premium, you pay your premium, is actually not what is invested in the market. So you can definitely talk to your agent about those options as well. So I want to spend a little bit more time on term insurance because, like I said, that is really something that most people, when they get life insurance, that is what they get. So I'm going to go through a few different scenarios and things that I think are important to highlight, especially nowadays. So the first one I'm going to highlight is actually student loans. If you're a student or you have a student that is graduating college, heading out into the workforce, and they have these student loans to pay back, you can do a term life insurance policy, insure that student, the new worker in the workforce. And so if something were to happen to that individual that you insured or they themselves insure, the life insurance policy can be used to pay back those student debt. I think that's really important. Those can typically be 10 to 15 years. So think about getting some life insurance so that you can cover your student loans. Something happens to you, they still can get paid. And then you don't put that burden on anybody else. All right, you've had something else. You've had a change in life. Now you're getting married. And now you're bringing finances together and different kinds of things and conversations occur. And this should be an important part of that conversation. This is part of your financial planning. If the insured passes away, you have funeral expenses to cover. You'll have living expenses to cover, debt repayment, possibly medical costs. So having some life insurance in your back pocket, not a bad thing to have when you're getting married. And the same goes for if you're getting a divorce, if you're separating. You should also have some life insurance because let's say you get divorced and the husband had the life insurance and the spouse didn't. That spouse should have life insurance because, again, if something were to happen to that person after they separate, they're now having coverage so that it protects any of their loved ones. Something else, you're buying a house. You can get term insurance to cover the same length of your mortgage, 15, 20, 30 years. I actually have term life insurance that was tied to our mortgage. And if something were to have happened to me, that policy would cover the remainder of the mortgage so that my husband wouldn't have to go and find extra cash to cover that mortgage. So mortgage term insurance, it's a great thing, I think, to have. I think something to have conversations over, whether you're in a relationship or not. If you're single and you're by yourself and you own your own home, I think you should go ahead and get yourself some term life insurance, could cover that mortgage. Also, term insurance can be income replacement. We talked about living benefits and we talked about qualifying illnesses or the death of the insured. So you have somebody who's working. So if my husband's working and he makes more money than me and he passes away, he has life insurance. That life insurance can help cover some of that income that I might lose. I might have a 401k or pension coming from his business if that's how things are set up, but this gives a little bit extra protection. Things change throughout life. So it's definitely important when it comes to income replacement. You can even get term insurance on your kids so that they get started with it so that if they come down with an illness or something happens, they can qualify still for term insurance going forward. There might not be as much of a restriction or risk in that regards. And or if something were to happen, unfortunately, you have coverage for that. So these are a few things that I'm just highlighting. Like I said, term insurance is definitely more budget friendly than permanent, and it's something to consider. So now that I've kind of gone over the 3 different main types of insurance, when is it a good time to review your life insurance policy? My rule of thumb really is start of a new year. You should definitely look. Do I have enough life insurance? Do I need to get life insurance? Do I need to make changes to my life insurance policy? And so there could really be like a checklist that you use at the beginning of the year to kind of help you determine, do I need to make changes? The other thing you could say to yourself is every 6 months I review it. And you should also definitely review it when you have changes in your life, your health, getting married, getting divorced, you have a child, covering for loved ones, part of estate planning, moving, getting a new job, things like that. So you want to definitely look at your current policies that you may have, whether it's personal or through your employer. And the other thing too is updating beneficiaries. You might decide to change beneficiaries. But note on that, the only person that can make changes to the beneficiary is the policy holder. So if you are both the policy holder and the insured, great, you can make those changes. If you are the insured and not the policy owner, but there needs to be some changes in beneficiaries, those conversations will need to be had. Also, any updates to retirement accounts, updating coverage amount. Maybe you want more, maybe you want less. I mentioned following divorce, purchasing a home. So you have to make sure that you review these things because if you don't and things don't get updated and the insured passes away, it could lead to a lot of issues, a lot of legal issues. So definitely check that out. And as always, I highly recommend you seek a financial professional. What I'm giving you is information, but it's important that you talk to a life insurance agent, a financial professional. you have a financial planner. It's important that you do that so you have a better understanding of everything that is going on. And there are the experts. Like I said, I'm a CPA, certified public accountant, and an independent life insurance agent. So I have experience in both areas. I definitely can talk to people about this. And of course, that's why I'm sharing this, because I think, it's definitely something you can never have enough of. So make sure you review your financial planning needs, review that life insurance. And until next time, this has been your Financial Maven. Hey, it's your Financial Maven, and I want to hear from you. Feel free to leave me your insights and money stories or questions that you may have about money. You can visit www.yourfinancialmavenpodcast.com and click on the I Want to Hear From You tab. I can't wait to hear what you have to say about money. The purpose of this podcast is to provide general information on the subjects discussed. It is for educational, informational, and entertainment purposes only. You should consult your CPA, accountant, or tax professional for all of your specific financial needs or situations. Your Financial Maven is hosted and produced by Samantha M. Besnoff, CPA, and Your Financial Maven, LLC. Editing is done by Kris Zarnoch of KMZen Creative. Music is written, composed, and performed by Daniel Shore.